All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about SMCI. SMCI is the underlying stock for SMCY, which is the Yieldmax SMCI Option Income Strategy ETF. This is Super Micro Computers, down today about 18%. So what I want to do today is I want to digest. This video is all about SMCI. What is going on with the stock? Why did it drop from roughly a $60 stock to now a $46 stock? Is this an opportunity? We're going to go through the earnings, not only this current earnings, which we see right here, but we're going to go through the previous earnings through the past few years and the past few quarters to see, okay, is this company growing the way we want? Is it a positive cash flowing company? Is this something that we see is going to be higher in the future? What do analysts think about the stock as well? What are the actual services and what do they provide as a company? SMCI, which is Super Micro Computers, and then as well, who are their competition? What are they up against? So this is a full video, short, informative, to the point about SMCY, SMCI, their current earnings, everything like that. And I want to give a shout out to my last video. I didn't think this video was going to do that great, but I'm super grateful that this is a 1 out of 10 video. So it was on margin. We're not going to talk about it. We're talking about SMCI up to 8,467 subscribers in the past 28 days. Thank you very much to everyone who subscribed. Let's get into this video because that's what you came here for. So SMCY now paying a 116% dividend yield, currently sitting at a share price, if we check it out, at $17.20, and it is down from roughly about $21 the previous day. This marks the question, is there an opportunity in SMCY now that the stock has had such a big hit? So why was there this hit? There was a hit because revenue came in lower than expected. Earnings were missed for the underlying stock, SMCI. Basically, revenue came at $5.76 billion, where the expected was $5.89 billion. Here's the thing. So with this expected revenue, I found as well, this is what they announced on their website. So prior to this earnings announcement, they gave an update what they thought that the Q2 earnings might be for 2025. And this was the expected range. The company expects net sales in a range of $5.5 billion to $6.1 billion for the second quarter of 2025. So they announced this back in December 31st, 2024. That was the last quarter. And so 5.5 billion to 6.1 billion. This estimate for the company came in pretty much on target as to what they said they would deliver. Of course, analysts expected a little bit higher, but what I do want to mention is I watched this video on Joseph Hogue before producing, obviously, my own. And what this shows here, I want to give a shout out to his channel, Let's Talk Money. Please do go subscribe because I am, of course, relating to this. But he made a great video and he showed how on the left here where he has it circled, stocks which produce positive earnings only went up on average about 1%, whereas stocks which produced an earnings miss, such as SMCI, for example, they are down on average about 6%. So you can see here the market is extremely pessimistic to companies who are missing earnings, and this I think is I think it's overinflated. I think this 18% drop is a huge hit that is not warranted, that should not have been in place for SMCI, and I do believe it produces an opportunity. And this is just kind of, I wanted to show you guys this so you guys understand. If you guys own the stock, there's a huge kind of sentiment around companies who are missing earnings, and they are being hit very heavily. So what does this mean? This means that we must look at how SMCI is doing on their balance sheet, because if we see how the company is growing, we say, okay, is this 18%, is it justified or not? And to me, no. The total revenue for SMCI is growing very strong. All the way back in 2021, only producing about $3 billion for their total revenue. Well, now you can see the growth year over year to $5 billion, $7 billion, 14 billion, now 21 billion. And when we look quarter to quarter, we could see that it looks like their third quarter could potentially be a pretty strong quarter for SMCI. All I want to see here is that they're growing their revenue quarter over quarter, and they're growing it strong, and it seems to be growing strong as well. The cost of revenue is extremely important. If they're growing their revenue but their cost of revenue is skyrocketing with it, it's kind of a red flag. What I see here is I see that their cost of revenue kind of stays consistent to their total revenue, which I don't like. I like to see a lot more separation. When we look at their operating income, I like to see that their operating income has been positive quarter over quarter, and that continues to last. Their net income, which I guess you can kind of consider their operating income, was $195 million. When we compare that to the last quarter of $146 million, it's growth. It's good. Quarter over quarter. Year over year, they have produced some pretty fantastic numbers. I'm pretty sure up 54% year over year, reflecting a 54% year over year growth in terms of their revenue, which is great. Gross margins are in a range from 11.8%. We're going to say 11.8%. The only thing is, yes, they did miss their earnings. 41 cents was what it came in as. 44 cents was expected. So, whole thing, they missed their earnings. But out of all of this, what do analysts think for the future? Well, analysts have a very bullish outlook on SMCI. You could see their current estimates for earnings per share are 48 cents. Okay? Well, in 2027, 2 years down the road, they're expected to earn about $3.57. You can see the massive growth difference here. I think that is crazy. This is, of course, for the full year, but when you take, let's say, 48 cents, or we'll round it up to 50 cents, times 4 quarters, that's $2. So you're looking at pretty good growth over the next couple years, and I think estimates are pretty bullish for this company. Even you look at, for example, the full year revenues, you could see 31 billion, then 39 billion. That's pretty aggressive growth right there. You could see the sales growth year over year, expected to be up to 44%. So analysts definitely rate this stock pretty highly. I do think it does present a good opportunity for the Yieldmax ETF currently. You could see it's a pretty good rejection off of there too, which could potentially mean, okay, we've seen some sort of just a negative reaction to going further down, but of course tomorrow will tell. All in all, I think SMCY could present a good opportunity. So do I think as well SMCI. And SMCI, to kind of talk a little bit about what they do, they produce SMCI, global technology leader committed to delivering first market innovation enterprise in terms of cloud, AI, metaverse, 5G. So they're in the technology space. They produce infrastructure kind of relating to technology, IT, and 5G. Now, as well, it mentions they're a solutions provider that designs and builds environmentally friendly and energy saving portfolio servers, storage systems, switches, softwares. Basically, how SMCI makes their money is they make their money off of selling physical products and also kind of like digital products. And they currently have 2,488 companies that use Super Micro Computers. Some companies with size really of over 5,000 to 10,000 employees, which I think is pretty good. I do think I would like to see a little bit of an upgrade in their business model where they can provide some kind of service, subscription service to really have more stable income than just selling physical products. But that could obviously be developed in the future. I don't work there, so I don't know, but that's something that I would like to see. And just to kind of show you guys some major competitors, you have Dell, Intel, NVIDIA, AMD, Microsoft, Facebook. So a lot of really well-known competitors. Of course, these are big players in the space, but I don't think they will absolutely dominate. I do think there's still room for smaller companies like SMCI. Definitely, of course, just my own opinion. I think this is overhit in my opinion. So this was just a short little video to show you guys an opportunity that's just arose in the market. I will definitely tell you guys if I do decide to buy a couple shares of SMCY with this new opportunity. Not sure why it's not showing there, but that's okay. I really hope you guys enjoyed and found this somewhat informative. We're up to 8,467 subscribers. Subscribe if you guys enjoyed this video, and I hope to see you guys in the next video.